Hello, everyone, and welcome to episode number 76 of JustDario, Cigar. It's been another incredible week in financial markets with fake news bandwagon reaching an apex of creativity in order to continue supporting the incredible market and investors' sentiment manipulation that now has been ongoing for more than 70 days since the war in the Middle East started. More than 70 days since we are in the worst oil supply shock in the Eastern. And yes, the oil price is higher, the price of the gasoline at the pump, the jet fuel and whatever are higher, but nowhere close all-time high. They didn't even cross the highest point reached when the war between Ukraine and Russia started in 2022. So this week, I spent quite some time really trying to understand how is possible that this manipulation is still so successful. And this is going to be the topic of today's podcast. Before we begin, don't forget to like the video, subscribe to the channel, and turn on the notifications if you don't want to miss any of my future updates. All right, let's dive in now into today's topic. So how the hell the oil price is still below $100, even if the worst supply shock in history not only is still there, but is worsening with every other day. So today, I'm going to do my best in putting together all the feedback I received from my contacts in the trading community, in the financial community, and also using further analysis that I did on the data itself. And there are several points that you can observe. One point is the misunderstanding of traders of what's happening into the supply chain. And here, a Bloomberg article that appeared this week is actually a pretty good example of that, because this article came out and said, hold on a second, the price of oil is not going up anymore. It actually came down because China imports of oil dropped significantly in the month of April. And I'm like, seriously, here is a perfect example of how you have a journalist or a poor analysis that see the chart of a commodity or whatever and is trying to take data, take it out of context, U-turn them, and then fit a narrative into what the prices are dictating. But that's not the truth. The imports of oil in China dropped in the month of April for a simple reason. There has been less oil they could buy. Did you forget that the US blockade started exactly in the month of April? And one of the beneficiaries of imports of oil from Iran was actually China. So that's the reason why imports of oil in China decreased, not because there is demand destruction. And this is the other point. There is this big push to convince the broader public that at the current oil price, demand destruction already happened, while it's a complete opposite. As a matter of fact, airlines are still flying around even if they increase the ticket prices significantly. There has been no particular drop in the current season of flight travel. There has been no particular drop right now into shipping. They can still afford to pay the current prices. There has been no drop whatsoever of car drivers' possibility to afford the current car, gasoline, and diesel costs. As a matter of fact, it's quite funny. People keep posting on X things like, oh, you see, the price at the pump now, I'm paying like 50% more, I'm paying double, whatever. Yeah, you're paying it. That's exactly the point. So there has been no demand destruction whatsoever. Period. So where is the oil that so far is helping to compensate rebalancing demand and supply coming from? Well, if there are no import and exports, right, the overall balance is broadly lower. Clearly, the oil is coming from the inside, from the reserves. And here is the pretty interesting thing, because as I discussed a while ago, like, yes, there has been announced the release of 400 million of SPR into the market. But still, the physical release of SPR is going to take months. And the gap between demand and supply would have remained there. So where is the other amount of oil coming from? The other amount of oil, clearly, is coming from commercial reserves. But here is where things start to become a little bit weird. Why weird? Because on one side, you have the CEOs of major oil companies, commodity traders, refiners, all of them warning about that so far already this year, we lost 1 billion barrels of oil supply. Wall Street as well is warning about this impending disaster. And then people turn around and they're like, man, dude, look at the price. We never got to all-time high. We didn't even cross the price that the peak at the start of the Ukraine-Russia war. So what the hell are you talking about? Well, the truth is that so far, according to what I heard, many of these players refrained from stockpiling, refrained from acting as if the disruption in the market will stay in place that much longer. Still, there is a very strong belief that the Strait of Hormuz and the whole situation in the Middle East can go back to normal in the blink of an eye. And yes, there are going to be disruptions, local shortages, whatever. But overall, everything is going to converge back to normal. So clearly, in this kind of situation, everyone expected the oil price to go down. So if you expect that, you're going to make more money selling your commercial reserves now rather than waiting for the future. And the reason why there is actually been a pretty good coordination between companies and governments to reach this kind of equilibrium in the market that helped to effectively stabilize and manipulate oil prices around a $100 level. All right, now that this first part is clear, the second part is, not a second, but the situation in the Middle East is not being solved whatsoever. To the point that there is a new popular acronym on Wall Street after Taco. Now everyone talks about Nacho. That is not a chance for the Strait of Hormuz to reopen. And I mean, think about this. If people rationally know that the current situation is going to stay in place, but at the same time you have a Taco, it's kind of like starting to clash here. You have two narratives that cannot really go hand in hand with each other. Okay? So this week, I've seen like more people warning about the matter of not only SPR drops, but also a very fast drop of commercial reserves in the system. To the point that, yes, things will remain stable at this level. Everyone is fine, but you know what? At some point, you're getting closer and closer and closer, to hitting the wall. And you might want to take a decision that if you want to remain in business, then, you know what? Better to start bidding up the available supply in the market. So the window to resolve the situation in the Strait of Hormuz is becoming smaller and smaller. So now the situation is Strait of Hormuz is going to reopen. Everything is going to normalize several months. There have been local shortages, but broadly speaking, things are going to be fine. What if things don't normalize? Well, that's a problem because, and here is the difference between today and COVID. In COVID, the demand for oil crashed because the whole world put itself in a lockdown, right? But now the situation is very different. Do you think that all countries in the world are going to agree to cut their local demand by, let's say, 10%, everyone together taking a hit onto their economies? Or do you think that there is going to be no coordination at that point? And people are like, okay, screw you. If I am a first mover here and I secure enough supply, my economy is going to be fine. And whoever is going to be left with the empty tanks is going to bear the damages of this. This is exactly the scenario that so far isn't being priced whatsoever in the market at all. And trust me, insiders and oil traders, everyone that is looking at data is growing more and more concerned. Kudos to the government to have successfully used the narrative, fake news, and effectively the SPR to manipulate oil prices to their desired level, contrary to what the SPR are meant for, because they're meant for moments of emergency to maintain the vital part of the economy going in case of supply shortages, not to make sure that everyone can continue going on holiday, going to, on a cruise and keep buying like as many plastic bags as they want, oil derivative, whatever, because they're scared that the economy is going to fall into a stagflation or even worse in an inflationary recession. Because, okay, we have enough. They're going to reopen the Strait of Hormuz soon. Like, we're going to be fine. It's going to just a bump in the road. Man, 1 week, 2 weeks, 3 weeks, 4, 5, 6, 7, 8, 9, 10 weeks now. You gotta be careful here, because currently the risk traders are pricing in the oil market, paradoxically, is back to the level prior to where the war started. Even if the price is roughly 35% higher for crude, 68% higher for diesel, and roughly 50% higher for gasoline, almost 100% higher for jet fuel, and whatever. So you successfully suppressed the sense of urgency, the sense of risk of people. Fine. But then, while on one side, you told people everything is going to be fine, there is no need you change your habit. There is no need to take preemptive actions whatsoever. Just keep going. We want the economy to be fine. No worries, it's going to be solved. You're getting close to that point in time when everyone is in this theater. The theater is on fire. There is already, people that are dropping on the floor because the smoke is starting to choke the oxygen out. And, you keep telling everyone oh, keep dancing, it's fine. And then at some point, someone is like, dude, you know what? Fuck it. And runs out of the exit door. And then the second, the third. So you better put down the fire now if you don't want to see people to panic for a second time. And you can calm people a first time. But if they panic for the second time, that's when the worst possible thing can happen in financial markets. And in these financial markets that are completely all over the place, completely detached from reality, with stocks at all-time high and measure of real economy like US consumer confidence at all-time low, things can snap very quickly. In the same way, you can successfully fabricate a 15% drop in minutes of the oil price. If you lose control in this situation, things can become very nasty. So, I want to conclude today. Sorry a little bit for the rant. I hope that the concepts I tried to explain are very clear. Fortunately, I cannot give you a clear timing. There has been several analysts that pointed now towards the end of May for significant supply shortages to finally surface in Europe, and US might even hit the brick wall by the 4th of July, when they're supposed to celebrate the 250 years since the birth of the nation. Imagine what time. Personally speaking, in this situation, I wouldn't be shocked if Trump finally will try to give it another try to escalate the game and close the matter here, forcing Iran to accept his terms. Because the longer this carry on, the more difficult this is going to be to accomplish. Thanks a lot for listening to my podcast today, for supporting me on X, on Instagram, and for reading my research on JustDario.com. I wish everyone a nice weekend.